everyone, and welcome to this HFS Videocast. I'm Reetika Fleming, Executive Research Leader at HFS, and I'm here to talk to Arun Balakrishnan from Xceedence today about P&C Insurance Carriers. Have you revisited your target operating model in the era of prompt engineering? So Arun, I'd love to get a short intro from you and tell us a little bit about your company.
Ritika, thanks for inviting me to your videocast. I'm the CEO of Xceedence. Started the company about 10 years ago now. It was June of 2013. Before that, I was the CEO for Berkshire Hathaway's insurance business in India. My career has been either insurance or entrepreneur. So at Xceedence, we started, the vision was to build a vertical focused insurance only service provider across the value chain of technology, ops, data, and analytics. And I'm sure we'll cover a lot more details during the rest of our chat.
Thank you for that. And yep, many years in the industry. So I'm looking forward to picking your brain here. Okay, so P&C carriers globally, it's been a little bit of a tough year. You've seen premiums go up, but so are the claims costs, whether that's inflation or natural catastrophes continuing to, climb up steadily. So yeah, would love to hear from you, what are clients coming to Xceedence for today? Is it different from, say, a few years ago?
I would say, yes, you're right about the changing landscape of the business, right? I think a few years ago it was really soft markets, right? So, everybody, the expenses was a big focus of the situation. So people were coming to us because they were just not getting enough rate, right? And so you're finding ways to optimize your expenses and different kind of paths were explored for that. Technology efficiencies, operational efficiencies, using different locations for labor cost arbitrage. But the focus was predominantly around, this, how can we further improvise our expenses? Last few years, there's been a bit of turn on that, there's good hard markets, rates are coming up. So I think the problem what we're seeing right now is problems front and center for the insurance carriers, like you mentioned. I think is more on the loss ratio side than the expense ratio bucket. Are you getting enough rate for it? Right? Is the right kind of adjudication mechanisms being deployed? Are we underwriting correctly? Are we doing the right kind of risk selection? Right? So the kind of challenges carriers are coming today to us is to further optimize that, right? So it could be around, do you have different data, better data? Do you have ways we could underwrite better or with more granularity? So 3-4 years ago, the problem statement some of the chief underwriting officers gave us was, we want to improve productivity of our underwriter from 4 million to 6 million per head, right? Now they're talking more, okay, let it be 4 million, but how do we ensure that it's the right kind of risk? We're going down to the detail we want. And so it's different conversations, but both are, part of the same pie in the sense it's optimization. The eventual goal is to get to the right combined, right? So getting to the right combined is a function, not just a pocket of time picking up expense ratio and then loss ratio, then looking at distribution ratio. I think at any given point of time, the industry needs to move to an optimal balance between each one of them. We've had different focus across each one of these areas. And I think based on times, catastrophes, everything that changes. But it's right now at a point wherein everybody's thinking about, I would say, all of these areas and not just one pocket.
Yeah, interesting. So you're suggesting, when they're thinking about their target operating model, maybe we revisit the benchmarks of what good really looks like or should look like for the future.
So I think yes, but I don't think it's just today's exercise. I think it's time we as an industry looked at it holistically. Right? So I think with the advent of technology, advent of data sources, advent of methods, in my opinion, there's a lot of duplicative costs in the industry. Right? So let's say commercial P&C as an example, right? we see some of our large broking clients sending the same submission to three or four different carriers, MGAs. The amount of duplicative work happening in each of these pockets around taking the data, cleansing the data, running your models, if it's a property account, having a view on, what your CAT rate should be, what your attritional should be. Similarly, in casualty side, if you're loss rating. Now, underwriting and pricing, everybody will get to a different answer, right? The prep work associated with that, or 60 to 70% of the grunt work to get to that is fairly similar. I would venture out and say it's not as distinctive. I think every company has its own flavor experience based on what they add to the core part of it. So if you think about the amount of duplicative costs going across everyone on that, is where the market overall has a better, it has a higher expense issue then, right? So if you think about the mix between what the workers, the brokers should be doing, right? What the capital providers should be doing, the underwriting function, I think there is an opportunity for us to create market-wide efficiencies by rebalancing some of the work across all these areas. For example, I always draw this analogy with the fixed income world, right? I mean, you have a large corporate bond being issued, you have the bankers do the analysis, come out with it, do the ratings, work with it, come up with the pricing band on it. And the capital providers sign up for it based on their appetite to accept that price and all or not. And if you don't, you look at it in the secondary markets, right? So it's not like once the company decides to do a bond issue, every capital investor is underwriting the bond themselves, right? It doesn't happen in that manner. And with the advent of for the brokers and in their evolution of the industry as well, I think the value proposition can't be only making a market. I mean, they'll have to bring a lot more to the table. They actually have all the data through them, right? They see so much. So, and then the last segment of whether we are doing the servicing of a policy, right? The invoicing, the collections, the FMA, all of that again is being duplicated within each insurance company, within each MGA. If it's an MGA going to reinsurance, there's further in. So I feel in some ways the whole value chain in the long term, it's not an answer, and we're talking in 2, 3 years or 5 years, but there is a room to actually rebalance some of the buckets of the premium across what an ideal expense ratio could be. Probably room to come down a bit. What's the right kind of distribution ratio? Maybe something coming in from, the underwriting expenses could move into this bucket. Effectively getting to a point wherein we can either pay more for the losses or, so that end benefit goes back to the customer. Either you provide that at a better price point or you improve the overall profitability within the industry. These are different paths we can take. But yeah, I do feel there is scope to rebalance across it. And the other big driving aspect is if we take each bucket, like for example, expense ratio is a bucket, right? Traditionally, we're used to thinking for ops, we are spending so much, for IT, we are spending so much, right? The ops and IT world are coming together. I think there's a big convergence happening. You can't think of these expenses in silos anymore. And we need to think, okay, what's the right portion of these expense ratios which go into all elements of ops and tech together? Because, it is going to be intertwined, right? If we think about, there is a potential in the, what you're spending towards your allocated or unallocated expenses for claims adjusting, especially lines of businesses like personal lines. You could have a bigger portion with the advent of technology and availability of data. And so can there be a bit more on virtual adjust? Doesn't everything have to be field adjusted? Those are other ways we could optimize that bucket. If we look at the amount being spent for underwriting, and there are elements of underwriting assistants, underwriting technicians, is there a potential for GenAI and prompt engineering to optimize some of the work such that these UAs and UTs can do 4 or 5 times what they were typically doing? So yeah, in all of these areas, I think there are ways we can think about optimizing. But if we keep thinking about this actively, when we as an industry will, push the frontiers of what the right amount should be across these.
Okay. That's interesting because you're talking about optimization, not in a silo, right? Looking at operations, technology transformation, etc. And then you're talking about optimization, not just in your company, but perhaps stepping back and taking the ecosystem view of of who's your channel, your distribution, your entire set of stakeholders that ultimately reach the customer or client at the other end. So an interesting point there is a service provider is part of that ecosystem, right? Are you thinking the role of the service provider has to change given some of those elements you just mentioned on, hey, data is so much more important now. You need to simplify your process.
I think it should. And, you know, I always say necessity is the mother of all invention, right? So in our case, we decided to be vertical focused, insurance industry, only one. So India was used to having a lot of, horizontals, IPOs, BPOs, every O out there, right? And we said, no, we'll do all functional lines, but only one industry. And that was because that's what we knew, right? That was what we knew, what we understood. And as insurance executives, what we felt at that point of time was there's too much of duplication happening. There was too much of silos. We were thinking about it as, again, the ops world is different, and IT world is different, data is different. So we felt creating a unified way or vertical focus where you have one player who can go across each has some value. And where I think the role needs to evolve as a customers is, I'm not just saying it because that's what we did, but companies expect more from the service providers. You have to be a partner in the business, right? Like one of the things we say is this shouldn't be about teach us your work and we'll do it cheaper. I mean, they need, customers should come in with an expectation of us as a partner. By us, I mean all service providers as a partner who can be a catalyst for their growth, innovation, or optimization, whatever you think about it, right? But there's an expectation that we need to come to the table with a solution across all these areas and not just we'll help manage expenses. So with that, yes, we should get best practices from the industry wherever possible. If we can add to the inherent data sources and augment the data, yes, new technologies. But what I don't think should happen is if I tell a customer, hey, you got to work with us, but it's a take all or take nothing approach. Like I'll get my tech, my folks will work on this. It has to be that either you take both or you don't take anything at all. I don't think that works. So, but at the same time, going and saying, doesn't matter which system you have, right? I'll work on the same. I think is another extreme of it. I think if we owe it to the customer, like, okay, you have a great system today, sure, everything, you have defined process, you're really looking for people who understand insurance to work on it, that's great. If we don't feel they have the right processes or the systems or this around it, there could be other solutions, including ours, which we feel takes into account all the automation and others, but they should be provided to the customer bespoke. And the customer should have the choice to work with them independently so that you're not tied in to one or the other. Yeah, I hope I touched upon what you're looking for.
Yeah, no, you did. So, it's interesting perspective on you need to be data and tech driven as a service provider, but also somehow save your clients from being vendor locked in, right? I'll
Yes.
promise you the world, but you have to buy this one platform or solution that I've developed or partnered with. Okay, I guess the other piece of that is ultimately what is the service provider incentivized to do for you as a client, right? We've as an industry, um, been in the butts for seats model versus being truly value and outcome driven. How do we change that for P&C carriers, right? Really being tied to their goals, whether that's under the quality of risk in that they're underwriting, and profitability and growth and innovation themes, as you mentioned, versus just managing cost.
I, I think yes, we need to evolve different business models, and to be fair to the customers, they are right. I mean, we do experience customers who are open to outcomes-driven engagement models, or we have done work with clients wherein we're providing a set of services, a combination of actuarial, some exposure management, technology, ops, everything bundled in as a percentage of the premium, right? So they wanted to cap it. That's how it was. We agreed on something which evolves totally fine for us. We work within that model as well. There are other customers who came in like, okay, you know what, our business is too, average ticket size on a policy is very high, right? I mean, premium ratio is not the best way possible to do it. So maybe it's on a transaction basis. So yeah, that's worked as well. Um, I think so if I talk about the smaller mid-tier carriers, larger MGAs, wholesalers, maybe mutuals. I think there's a bit more receptivity towards it, and especially people who are going to be coming out working with global service providers like us for the first time. I think they are a bit more receptive. Some of the largest clients, be it coming in from the broker side or insurers, commercial and personal lines, I think everybody wants this. They talk about this, but when we see actual contract discussions, it tends to go back to, okay, what's it saving us over the FT cost we had before, right? So I think there's a bit of, the contracts of the past, that hangover is still there a bit, right? So getting them to move on that or change on that, we see slower than other areas. But yes, I think engagement models are evolving. Customers are getting a bit more experience about it. They're getting more savvy about it, and they like the fact that we're thinking in that direction, right? So I think it's lead to the overall service industry getting to a better place, right? So I'm quite bullish about
Is it
that.
going to bring us to this promised land of straight through processing? I mean, not just for, say, simpler products, etc., but across lines of business.
Yeah, no, but I mean, truly, if you think about straight through processing, right? I think in some lines of business, it just shouldn't be as well, right? Because the nature of it is evolving, and the underwriting, the risk being underwritten has too many dynamic things that's almost cost prohibitive to rely on technology there. And for the ticket size, it doesn't make sense. But let's take even now, right? I mean, travel insurance to a large extent is getting straight through processing, right? I mean, it's most of the places it's sold is direct embedded into the journey. Even the claims processing, many companies are linked directly to the flight systems. It's no questions asked. It's straight through processing of not just policy claims, but you have a low ticket, high frequency product, something like that, which all. So it's not like it's not possible. I think so. Where it really the human loop kept coming into these products is decision points. If you're taking personal lines, for example, if it's an absolutely clear cut case wherein there's a no on most of the underwriting questions and you rely on that, it becomes easy. But when the moment you answer a yes or a no, no with some exceptions, or you enter something out of the course, that's wherein the human loop came in. But it's the pricing, the underwriting, and then endorsements, the whole value chain. The more places where the human loop kept coming in is wherein it's harder to enable straight through process. What large language models and Gen AI allows is, interpreting some of that information, and at least the easier, simpler ones we could eliminate. So the advancement of Gen AI, in my opinion, will keep happening in straight through processing. We're first picking up the low hanging fruits on that, wherein a large language model can reasonably understand the same as a person getting in would be, right? And that in certain lines of businesses, after a great amount of time, after fairly soon, a great number of such scenarios will be covered. So it'll enable that journey. So it might just lead to a world wherein you have a self-driving car, which is voice enabled, LLM enabled to understand and communicate with you. That's a whole new risk class in itself. And from day one, we can set up a straight through processing ability on it, right? So yeah, I think times are exciting. It shows a lot of promise relative to what we have seen in recent times to make an impact on the industry in a very big way. And to me, the number one reason for that is end customer adoption of this technology has happened with a with a higher degree of pace, which is kind of forcing all businesses to catch up. So I don't think insurance industry is going to be far behind.
So, what would you recommend for P&C carrier executives today thinking about their target operating models, considering the technology discussion we just had too for the year ahead?
I think if I can give immediate tactical something look down, it would be the same as let's not create silos within expense ratios around ops, tech, underwriting, and let's try to see holistically what that is and if there are ways to drive a common vision there. And in the long term, I would say is I think with the advent of technologies like the large language models and GenAI, we have an ability to reshape and think about how we've been doing business, especially on underwriting side a bit. And I think we should be more open to it. I don't think we need to rush into it. We should be open to the possibilities. And just, I know it's an interest of time, but something I always like to give an example of is we get asked so many times, is there a way you can find out to automate the responses to all these underwriting questions by going out there and getting, and I always ask them, why these questions? These were designed 40, 50 years ago when different sources of data exist. You didn't carry the same volume of data you did on a daily basis. You, you didn't have the ability to ingest it in the same manner. So we are in times wherein we have an ability to just go back to the drawing board on these things and it'll create good, better outcomes for everybody in the future.
Love it. So, don't bring legacy thinking into designing your outcomes for the future.
Yeah, well, like I say, you're way more articulate than I am, Ritika, on this.
Hardly. This has been a fantastic conversation. Thank you, Arun. Thank you for watching, and come find us on hfsresearch.com to talk about all things insurance operating models and obviously Gen AI. Thank you.
Thank you, Ritika.